Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here. Appreciate it.
All right. So we're talking online gaming, Penn Gaming, DraftKings. These stocks have just been battered along with everything else. It seems like people are drying up as far as maybe the capital to bet online. But, the coverage from some of these companies, not all the states allow this yet. So maybe, looking forward, their total addressable market, it hasn't even been close to being met at this point. What are you guys seeing as far as data goes? Because it seems like people want to go to casinos and not bet online anymore.
Yeah, I hear you. Well, we're kind of in a dead zone when it comes to sports betting right now. There's not a lot to bet on, so we're still waiting on some of the leagues to get started. NFL is just right around the corner. But you're right. There is no downtime for casinos. They're always open 24/7, 365. So it's a fantastic business to be in. And when you kind of compare like DraftKings versus Penn, that's the big stark difference is that one owns and operates many casinos and sports books, and the other one is just online gambling for sports only. And so when you look at sports betting, it's actually, you've got to correct for seasonality because of what I just talked about. So we always look year over year. And so sports betting is up almost 30% year over year. So people are getting back into it, while as visiting casinos only up 9%, but it really didn't have the same drawdown, I think, that Sportsbook did. So it's still kind of remaining strong, but sports are making a little bit of a comeback. So if you just looked at that, you would think that DraftKings would be, stronger than Penn. I like to kind of compare these two. But actually what we're seeing is that when you look at just total mention volume or purchase intent, happiness, all of it, Penn National Gaming with Barstool Sports driving it, especially online, is in that top right zone. So they've got the growth in purchase intent and they've got the happiest customers, whereas DraftKings and we even threw in Flutter with FanDuel there are kind of lagging back a little bit because, again, they're more focused on the sports side of things only and don't have as many casino properties. They don't have any casino properties, whereas Penn does. So when you look at that, I think that, it's crazy to think about these two companies being valued about the same. DraftKings is just a little bit more, actually, just over $7 billion. Penn National Gaming at $6 billion. One of them loses $4 a share. The other one makes $2 a share. And it's wild to think that the one that's valued less, Penn, is the one that's profitable. So they have, in my mind, if you're looking at these two companies, they're kind of they both have the same sort of moonshot possible strategy, and that is dominating online. The margins are very high. You get in there with the fantasy players and the sports betting, the margins are very, very high on that. And if you could dominate that, that's your ticket, right? That's huge money. But the difference between them is that Penn is backed up by brick and mortar that is never going away, and that's just continually pumping cash in. Plus, they've got Barstool Sports pumping in new users. So I think that their strategy is a little bit more sound. It's going to be the safer bet, whereas I think both have about the same likelihood of success on the moonshot or whatever you want to call it, where you dominate online. So I think the possible downside is that there is the chance that we're getting saturated in the U.S. There's a lot of competition for sports betting online because it is such a high margin, such an attractive customer base that you want to grab, that it's expensive to get them initially. Like once you get them, they're extremely popular. Extremely popular, excuse me. But the cost of acquisition can be very high, and I think that's why it was smart for the investment and acquisition of Barstool Sports, because then that's sort of continued free marketing and free advertising for Penn. So long term, I think that DraftKings is in a good spot. I don't love them going into this earnings report, and I would hold off. But with shares off about 75% from all-time highs and mentions on a higher lows situation because we're in an off season, I think that they have a chance at coming through successful from all of this. But if you made me pick between the two, it's hands down Penn, because they're in the same situation. Their stock's not off as much from all-time highs, about 58%. but they're already profitable. They've got the brick and mortar casinos backing them, and they've got the ability to tap into the same user base and go for that same home run. So between the two, I like Penn by far.
Landon, I am not a big gambler. It's hard to live your life with a foundation of probabilities and then go willingly sit at a blackjack table where the odds are against you every time you play. But I'm going to make a brash statement, paint with a broad brush statement on this, Landon, and you tell me where I'm dead wrong. I think Penn National Gaming, I think these companies, I think casinos in general are going the way of the motorcycle. That's an older generation. That's what they do. These guys, where you can impulse bet in seconds on your phone without travel, is the future of gambling, and that's what they should be focusing on. And as that gets bigger and bigger and bigger, these other things are just going to go away, Landon. Tell me where I'm wrong.
I think you're dead wrong. I think absolutely sports betting 100% on your phone. You don't want to go. It's going to a sports book now and then can be fun because everybody's watching the same game. You know, you go to Vegas during March Madness. That's amazing. But if you're just talking about, you know, watching your favorite team and you want to put $50, $100 on them, absolutely do it on your phone. But you know, I can tell you the casino thing. I'm not a big casino guy because, again, I know exactly what you're talking about. I put my money down. If I place a $100 bet, I'm expecting to get $98.50 back, and that bothers me. So absolutely, I agree with what you're saying, but it's popular, and people are not stopping. And I think the difference is if you bet on a game, right? If you're an avid gambler and you bet on a game, it's fun for 2 or 3 hours, and then you go about your life. But if you really want to have that rush or whatever you want to call it for several hours in a row, where it's every 30 seconds, every minute something's happening, you have to go to a casino for that. It's a social event. And horse racing, as you guys are throwing up some stuff here, horse racing is making a little bit of a comeback. So I'm a big believer in these, and I think that it's just so profitable, and the math is so much on the house's side. You know, I mean, you go to Vegas and you think, where'd all this money come from? It's because they have that house advantage. I still think even in, you know, my friend group and people that I talk to, you know, every once in a while I get invited, hey, let's go to the casino. So I still think it's going to be popular. I don't think it's on its way out, but I would agree that the sportsbook side of things is going to be taken over by mobile and online for sure.
Yeah, we have seen that trend, Landon, but I think people go to Vegas, and even the times that I'm there, they're going to Vegas to go to Vegas for the experience, and maybe not a lot of the younger generation are gambling there because they can do it on their phone now. But at the same time, when you look at sports betting up 29% according to your data on that year-over-year percentage basis, visiting casinos only up a little bit. I'm surprised at that because if you've looked at some of the data coming out of Nevada, that the gaming revenues continue to move higher and people want to continue to go there. Is that going to be a trend where, hey, you know what, they all have their own apps now also, but they've got a bigger backstop like Penn Gaming does because they do have some brick and mortar casinos?
Yeah, I think that's the key. I think it's a very, you know, tough space to compete in online. And, you know, if you were first mover in that, you had a huge advantage. DraftKings, FanDuel had that, but now there's others catching up, and there's, you know, the margins are just so high for someone having your app on their phone to bet sports or bet fantasy. It's just so high that the cost of acquisition is going through the roof because everybody's trying to get that customer with incentives and paid ads and everything else. So you have to have backing, and it's either through investors or it's through a cash cow like casinos. So I would much rather have a company that's just getting influxed with cash every single day from casinos and racetracks than having to draw down with investors and continually lose money. So it's very possible that DraftKings could turn that corner, could become profitable, and they could be the dominant player in the industry, but that's their only chance. Whereas with Penn National Gaming, if they do that, great, good for them. They're going to be huge. But if they don't, they can always fall back on this cash cow machine. And so I really like Penn going into just long term, going into earnings slightly bullish, but not tremendously. But overall, I do think that they're way undervalued here. And long term, this could, again, looking back, this could look like a great buying opportunity in the mid 30s.
Yeah, I saw that on their purchase intent versus sentiment. up in the far right channel as far as that graph goes, because that's where you want to be. But you mentioned you're slightly positive on this, more on the long term. What is the earnings score on it?
So DraftKings, which I think Friday morning, they're negative 36. Penn, which I think is tomorrow morning, is plus 23. So pretty stark difference between the two.
Definitely. All right. The data confirms it. All right, Landon. Great stuff as always.
Thanks a lot, guys. Take care.
All right. That's Landon Swan, the co-founder of LikeFolio, bringing us the data. Now, Kevin,